Howdy, folks. Welcome to Liberty Call. Today is Wednesday, October 18th, 2023. Hope everybody's having a fantastical day out there in the interwebs. It is beautiful here in Colorado. A little bit of clouds. All the leaves are changing. I think they're even more orange today than they were yesterday. So it's like fall here in this part of the country. I'm sure if you go over to Aspen, it probably looks wonderful with all the aspen trees changing. Anyways. All right. Been a busy day for me. Had lots of meetings, and the markets are ugly, which is a good thing if you are, if you do things the way I do things, because we want the market to go to hell because we're due for a market crash. So this lines up the way I think. Should be pretty good for my clients. Anyways. All right. Well, if it is your first time watching Liberty Call, if you could do me a favor, give me some thumbs up, like, share, subscribe, follows, and hit that notification bell. You want to know when I go live. Let's go ahead and get into the numbers for today. Dow Jones was down 0.98%, 332 points, closed at 33,665. S&P 500 down 1.34%, closed at 4314. Nasdaq down 1.62%, closed at 13,314. The VIX is up to 19.22. It was in 17 or 18 yesterday, so up quite a bit. Let me see. The VIX was up about 7.5% today based upon that chart. So let's get back to it. Canada was down 1.23, Brazil was down 1.6, and Mexico was down 0.79%. Germany was down 1.03%, the UK down 1.14%, France down 0.91%, Netherlands down 0.98%, Spain down 0.92%, Italy down 0.82%, Switzerland down 1.28%, and Portugal, kind of one bright spots, flat, up 0.05% for the day. Russian exchanges in the green, MOEX up 0.06, the RTSI up 0.42. And the overnights, the Nikkei in Japan was up 0.2%, Australia was up 0.3%, New Zealand down 0.25%. In China, the Shanghai was down 0.8, the Shenzhen component down 1.24, China 850 down 0.19, DJ Shanghai down 0.91, Hang Seng up 0.09, and the Taiwan weighted was down 1.21%. So it was a pretty ugly day. The markets were angry markets. What was it? Bob Ross, he used to paint, happy little clouds. We got angry little markets. All right, let's go ahead and get to the market recap. S&P 500 falls as Nvidia drives tech lower ahead of Tesla and Netflix results. All right, get to my notes here. All right, Wednesday, the S&P 500 faced declines influenced by continued pressure on the tech sector, particularly from Nvidia. Nvidia's impact persisted for a second consecutive day, just ahead of quarterly reports from major players like Netflix and Tesla. Morgan Stanley, closing out a series of big bank earnings, reported results that exceeded Wall Street estimates. However, a more than 5% dip in its shares followed due to underperformance in its wealth management and investment banking divisions. A 27% decline in revenue from the investment banking business and a modest 5% rise in the wealth management unit contributed to the market's response. The New York Federal Reserve President, John Williams, emphasized the likelihood of the Fed maintaining higher interest rates for an extended period to counter inflation. Kind of the opposite of most of these financial journalists that have been talking all summer and hell, even late last year. Oh, when's the Fed going to lower rates? When are they going to do some quantitative easing? We need help. The statement preceded remarks expected from Fed Chairman Jerome Powell. Investors are keen to see if Powell endorses recent suggestions from fellow Fed members that the surge in Treasury yields could substitute for imminent rate hikes. There's a nearly certain expectation of a pause on rate hikes for November, while the odds of a December hike increased from 26 to 40% during the last week. Nvidia faced a 4% decline following warnings about tightened U.S. restrictions on exporting A800 and H800 chips to China. The company expressed concerns about the potential impact on product development timelines and support for existing customers. United Airlines reported better than expected Q3 results, but its shares fell 9% due to a gloomy profit outlook attributed to higher fuel costs and suspended flights to Tel Aviv. On the contrary, Procter & Gamble reported third quarter results surpassing estimates, largely driven by increased gross margins resulting from favorable commodity costs and higher prices. The company remains on track to meet the higher end of its annual guidance. All right, so that's everything that's happening in the markets today. Awesome news, maybe. Let's dig a little deeper into oil prices. Oil up 2% on U.S. crude draw, Middle East risk after Gaza hospital blast. All right. Reports that oil prices rose by 2% on Wednesday due to a weekly drop in U.S. crude and fuel stockpiles. The bombing of a Gaza hospital added potential risk to crude prices, although the conflicting parties aren't major oil producers. West Texas Intermediate crude for November delivery settled at $88.32 per barrel, and Brent crude for December settled at $91.50. The Israel, Hamas, and Ukraine wars supported oil prices in a season known for weakened oil demand. Two wars increased the risk of oil supplies, making European and Asian buyers more interested in U.S. crude. The U.S. Energy Information Administration report showed a 4.5 million barrel decline in U.S. crude stockpiles, driven by increased exports and OPEC Plus supply cuts. Gasoline and distillates inventories also decreased. Despite seasonal fuel demand softness, larger than usual declines in fuel stocks occurred due to the U.S. refining industry's maintenance. The article noted a decline in Cushing storage levels, raising concerns about operational complications, and it highlights Russia's role in OPEC Plus and questions about its commitment to production plans. Russia's Deputy Prime Minister Alexander Novak stated it's too early to discuss an OPEC Plus decision in November, and Russia's central bank suggested discussing a possible oil output increase in early 2024 if the global oil deficit worsens. All right, so that's some positive news there. So let's get that off the screen. Remove. All right. So oil is obviously in high demand right now due to global conflicts and all the other problems we got going on in the world. So let's hope. I mean, it has been going down here locally. I mean, I think I was talking to my father earlier, and we were talking oil, gas prices, and I think diesel's around 4, and regular gas is 3-ish. I've seen some lower prices in other parts of the country, but we're not there yet. All right, one last article here comes from Zero Hedge. It's titled "Ron Paul, a new House Speaker won't solve the bigger problem." This comes via Shift Gold. This was originally written or published by the Ron Paul Institute, and Dr. Paul wrote this last week. So let's get into my summary here. All right. The recent ousting of House Speaker Kevin McCarthy has occurred against the backdrop of a continuing resolution aimed at averting a government shutdown. Dissatisfied Republicans critical of the GOP's perceived negligence in addressing federal spending issues collaborated with Democrats to remove McCarthy from his position, which I thought was pretty funny. However, this political shakeup, while perhaps satisfying to some, like me, doesn't offer a solution to the substantial challenges facing the U.S. government. Well, the problem is they're just going to put someone else there who's another yes man who's going to just continue the same problem. Not that I don't think Jim Jordan has any spine either. I mean, yeah, he rolls his sleeves up and he doesn't wear a jacket, but he's a swamp creature like the rest of them. The U.S. government is grappling with an astronomical debt exceeding $33 trillion. In a mere 20 days, the Biden administration contributed $500 billion to this staggering debt. As a former Congressman, Ron Paul notes, the root of the problem extends beyond mere political maneuvering. It's a confluence of financial and moral bankruptcy. The catalyst for McCarthy's removal involved a secret deal with President Biden and Democrats to secure funding for Ukraine separately from a bill designed to keep the government operational. While this maneuver triggered discontent among Republicans, it's emblematic of a broader issue, a broken House of Representatives more focused on political theatrics than addressing the mammoth yearly omnibus spending bill. The dissatisfaction is not solely political. It reflects growing frustration with foreign interventionism. Gates and his allies by being excluded they were pissed off by being excluded from critical decisions, signifying a shift in attitude toward perpetual wars. The consequences of such conflicts, often initiated by neocons from both parties, resulted in suffering in the claim to be liberated countries and further enrichment of military-industrial complex. While the change in leadership won't miraculously solve the U.S.'s deep-rooted financial and moral challenges, The event underscores a growing awareness among lawmakers and the public about the consequences of unchecked government spending, particularly in the context of perpetual wars and interventions. Sorry there. Sometimes words are beyond my vocabulary. Alrighty, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening. Maybe the Astros will actually win a game tonight. I mean, they played like dog crap so far this week, so let's hope they can scratch a win, or else they're pretty much done for. So, again, hope everyone has a wonderful evening, and I'll talk to you next time. Adios.